Good afternoon, everyone. Thank you all for being here today. Welcome to the Future Investment Initiative. And in this session, we're exploring innovation that are democratizing finance. I'm joined by three great founders that have all built market leaders in their industries. And I think we'll just start off by some introductions. Jason Gardner, founder of Marqeta, a public company that's setting new standards in open platform card issuing and processing. Arthur Levy, Chief Business Officer at Brex, the global corporate spend management platform powered by AI. And then finally, Eli Broverman, founder of Treasury, a global FinTech fund, and also the co-founder of Betterment, which reshaped wealth management for individuals. So I think we're going to get straight into it. And I think initially I want to focus on you, Jason. So what does democratized finance mean to you? And how have you helped kind of impact that with your business with Marqeta?
So I would define democratized finance as fair and equal access to financial services for all folks, including the unbanked and underbanked. And if we think about the exchange of value, the exchange of value has been going on for thousands of years, and it will go on for thousands, if not tens of thousands of years. And giving access to all people within the ecosystem of moving money, I think is really, really important. And you still have, even in today, in 2024, you still have billions of people around the world who do not have access to financial services. What Marqeta has done is we, back in 2010 when we got started, is we built the ability to have a platform on top of a bank so many companies could build financial services for constituencies that were underserved. We now, at the time it only operated the US, we now operate in 42 countries around the world.
That's super interesting. And Art, it's important to focus maybe on the ethos of how Brex was built. Essentially by, it's a story about Brazilian founders that had, a lack of access to banking services, and how have they taken the problems that they were solving within their own lives and kind of given that to everyone else in the world?
Absolutely. So for those of you who don't know, Brex is a global corporate card started by two Brazilian founders, Enrique and Pedro, who couldn't get access to capital for their first business when they moved to the US. And so off of that, we've built a business that better serves global founders. And the way we do that is by underwriting based on different factors than what legacy banks used to do, work with global other technologies to ensure that we're allowing these founders who were previously underbanked to have a corporate card solution.
And I think, Eli, I want to put your operating hat for this.
Sure.
For this as well, given your days at Betterment. How did you democratize wealth management for individuals?
Sure. So I started my path in FinTech by building Betterment. We launched that business in 2010, and it started with the idea of how do we build wealth management that can reach a lot of people and is going to be truly aligned with the customers that we serve. It's going to have their best interests in mind with all the decisions we make. And we've built that business today to manage over $50 billion. We do it for individuals. We do it through employers, so we support employers with their retirement plans and their 401k plans. We even do it by providing back-end infrastructure for financial advisors so that they can help clients who have more complex needs. And to do that, really, we leveraged technology. That's how I think about democratizing finance, is you can leverage technology. We were the first in the world to create this category of robo-advising, and we put customer securities accounts in the cloud. We were the first securities broker in the world to host accounts in cloud infrastructure. We were the first to scale fractional share trading at large. We were across that tech system. It was the tools and technologies like API frameworks that we built on that helped us reach a larger scale.
And I think whenever we talk about FinTech innovation, one of the things that me as an investor into FinTechs and spending time with you, regulatory oversight and how tough the regulators are on FinTechs usually stifles innovation on how far you can go in delivering good product experience to your customers. So I think maybe I'll go to you, Jason, based on the last 15 years of building, Marqeta, how has regulations, changed from when you started to today?
So back in 2010, regulation I think is important. It creates guardrails, but there's a big gray area that you can operate in to go build a business. What's now happened over the last 15 years, if you've seen hundreds of billions of dollars being invested in FinTech really around the world, and it's stressed the smaller banks. The larger banks like a Bank of America or a Chase or a Citi, you can't work with them as a small FinTech. They don't work with what's called a third-party processor in Marqeta's world. We're a issuing processing system, so all of the credit cards in your wallet or debit cards in your wallet are processed by an issuing processing system. So when we built our technology, we had to work with much smaller banks. Now what's happened, those banks were maybe moving hundreds of millions of dollars. Now they're moving hundreds of billions of dollars. And regulation has been heavily focused on these banks, so it's really sort of stifled innovation. And you at the same time as you have hundreds of billions of dollars of VC money flowing into FinTech. It doesn't mean that the innovation has stopped. The innovation is still there, but the regulation has really changed. And now, like this morning, when His Excellency was talking about in his opening remarks, he talked about policy and investment. And I think those two go hand in hand. The policy can really create not only the guardrails, but the path for you to go build technology. And as we've seen, there's a lot of entrepreneurship happening in MENA, especially within financial services, but also the investment from the government in these, not only the regulation and the technology, but also the ability to create the culture to go build things. We're finding now in the US, and you can see this in Europe as well, where a lot of the innovation is now being stifled by regulation. So in many ways, there needs to be a focus on the innovation to not only bring underbanked and unbanked into the ecosystem, but also to create the ability so that entrepreneurs can still continue to go build FinTech technology without stifling that innovation or stifling the creativity.
And just moving to you, Art, given that Brex is regulated, how do you essentially protect your customers and adhere to obviously the US regulation and the guidelines that they put on you with innovating with new products? Like, how do you find that balance between both?
Yeah, I would definitely agree with Jason that the regulatory scrutiny has gotten more severe over the last few years, but the way we see it at Brex is it can actually be a bit of a moat. We're extremely careful with our customer data. We're extremely careful in the way we work with our customer base. And so while we have to and continue to listen to all of the rules and regulations, we've seen some of our competitors that haven't been able to adapt to that changing landscape. Of course, we want to still create the best customer experience, so we have to balance that with ensuring that we still have really fast onboarding. The customer experience, even if we need these more documents from them, is still fast and easy, but we actually see it as a bit of a moat.
And then I think, Eli, there's maybe two ways you can answer this question, being a past operator and an investor. How important is it, as an investor in FinTech, how important is it for the ability of the founders to be able to get licensed and continue to protect their customers?
We think that's essential. For the last 5 years, I've been running Treasury. It's an early stage FinTech-focused venture fund based in New York, and we back founders who really are going after getting their own license and want to attack a dusty, dormant part of the financial system. It's through owning that license where you can really reimagine how services work. I'm looking for founders who are going to know the text of the rules that apply to the heart of their business backwards and forwards. Master that text. If you know those rules yourself, then you can build and design a product that lives within the lines of those rules. I want founders who are masters at very artfully coloring within the lines. And if you do that, you're building on top of a new license that's much more nimble than the incumbents that you're rising up to challenge. It gives you a great advantage over the longer term.
And you've spent the last couple of years in Saudi, speaking to some of the local founders here as well. I think, given that we have some of the founders here on the crowd today, what are the biggest differences and maybe advantages you've seen with the streamlined system that we have here in Saudi today compared to how the US regulators are?
Well, I think you have a pretty different environment in a market like the Kingdom. In the US, regulators primarily play defense. They have rules that have really been established for a long time and are slow to create new rules. And so when they're looking at fintechs, their primary charge is just to make sure that you're abiding by the rules that have been on the books for a long time. I think in the kingdom and other emerging markets, you often see both a protective function for regulators, but also effectively a government business development function. It's a very different environment to be building in.
And I think now we should probably shift our focus to AI, and I think now is the right time to do that. According to McKinsey, 65% of companies report that their organizations are regularly using GenAI, which is nearly double what it was a year ago. And I think maybe I'm very interested to hear your perspective, Jason, and how have you utilized AI within Marqeta, if you have within any of those your categories? Would love to know that.
Yeah, we do use generative AI. It's been interesting at this conference. It's like almost every, especially in the main hall, is all about AI. And I think because AI is coming fast and strong, and I think it's affecting all areas of the market, where we sort of have dipped our toe is generative AI on Marqeta docs. So when an engineer or a product person comes in, they want to go build a specific card product, they know what the outcome that they want, but they don't know necessarily how to do it. So they can use AI to describe the product they want to go build, and then we'll generate the docs for them to go and start building those applications. The way it used to be is there were sort of high views of, I want to build a product for buy now, pay later, or build a product for food delivery. And then they would have to go down deep into the docs and find what they needed. Now they can sort of generate that. But I think within FinTech, and something that we're looking at is everything from KYC to fraud. How can we see, fraudsters are really good at figuring out the next way to commit fraud, but AI can begin learning those models so that they can recognize them. But today it's really just generating docs to help engineers and product people build products.
And Art, in the last 24 months or so, you're integrating AI within your within Brex as well. Are you building AI from the ground up? Are you incorporating AI from other businesses? I would love to understand the balance between those two.
Absolutely. So Brex, because we're the spend management platform for digitally native businesses, we're ingesting data from a lot of different platforms. And so essentially one of the ways we've incorporated AI is taking that unstructured data and generating insights for our customers on where and how they're spending. And so essentially you can query through the Brex platform understanding, oh, you spent more on this category of spend than your customers. Did you know that you're spending on OpenAI, you could be spending on Anthropic models in these ways? We both have an in-house AI team as well as work with OpenAI and some of the other solutions. We've also, similar to Jason, have been focusing on fraud as a category that we think that AI can have a meaningful impact for us.
And then maybe Eli, within your current fund Treasury, how important is AI when it comes to building financial services in the US today?
Well, let's start with this. AI, financial services already is one of the early use cases for AI. Why is that? You're dealing with large protected data sources, you have privacy concerns, and you also have high value services. If we look across some of the companies that we've backed that are being powered by AI, I see companies in these early days of the paradigm shift that are often dealing with high-ticket items. So a company like Vantager that we backed helps actually allocators make manager selections when they're thinking about private funds, hedge funds, reviewing performance. So you're talking about allocators who are making decisions to allocate $10 million, $100 million, maybe $500 million. Those decisions are super valuable. I'm also seeing it in the wealth tech space. So actually my co-founder at Betterment started a company that's building a AI assistant for financial advisors. That company's called Warmer. And again, these are financial advisors who have clients who are worth hundreds of thousands, millions of dollars over the lifetimes. Why is that? Why are we seeing it happen at the higher end of the market? It's because it's expensive. It costs probably about $100 million to train the most recent version of Llama. I think Sam Altman says that maybe cost more to train the latest versions of OpenAI. And for founders to build on top of those language models, they have to then do some fitting that can cost them hundreds of thousands or millions of dollars. So you need that payback. I think there will be trickle-down effects, and we're seeing some of that also. We backed a company called April Tax. April Tax is building tax returns that are powered by an AI back engine. So you have 70 million Americans who e-file their taxes every year. They probably spend 1 billion hours doing those taxes. Because we don't have very good software to power that, a company like April can take the 500,000 or so pages of rules and regulations that the IRS has accumulated over the years. It can harmonize it into software and plug it right into your bank account at a Chime or your payroll at a Gusto. Those are some of the places where we're seeing it really play forward in the early days.
And then I think sticking with the AI subject for a little longer, within your current companies and on the user experience side, how are they experiencing AI from their perspective? Are they having a more seamless experience? Are they seeing a difference in how potentially Marqeta is servicing them?
Well, so when a company builds on Marqeta, they're building a card product to service their constituency. That could be companies like DoorDash, Instacart, Cash App, Lydia in France. In Buy Now, Pay Later, it could be Klarna throughout Europe. So they're using AI in different ways to service their constituency. And I've always found that the best design wins. That's how really good companies are built, because they build great designs. I think AI can really help with that, to build a great consumer experience. So what we're finding is we're providing part of the recipe to help these companies build great products, but then they're using AI to create a great user experience, and ultimately they'll win because the design is better, not only how the technologies that are using like AI, but how their applications are built.
And I mean, we have some founders here that are also building, one in particular was my portfolio company that's building something similar to yourself in the region. And he's right there. I think you just waved at him.
I know him.
Yeah.
I keep tabs on all of our friends building.
I think, can you give us an idea of maybe some of the new products that you're currently launching at Brex?
So new products at Brex. So we've moved on from the AI topic.
Yep.
Okay, so moving on from the AI topic. So yeah, in terms of new products, essentially Brex's goal is to be the spend management platform for digitally native businesses. What that means is we want you to be more efficient at managing your costs. And so essentially we're trying to save you from making that extra payroll hire, that extra procurement manager hire. So in that vein, I think the places that we're really investing in is in our global infrastructure for the card and in our bill pay and procurement workflows. So essentially those are two places where we've seen founders, 1 in 3 startups is going global much earlier than what I've been at Brex for 6 years, what I saw in 2019, let's say. And so in that vein, we need to ensure that we can serve their employees all around the world. And so investing in our global infrastructure so we can issue cards for all of those employees abroad is probably the biggest product change we're making.
And then now maybe looking towards the future in FinTech, maybe one thing I want to hone in on is, what we think the next frontier in financial services, might be. We're even seeing non-FinTech companies that are building FinTech, financial services, the likes of Apple, for example. Their savings account launched last year, and they managed to draw over $10 billion in deposits in just a few months. We're seeing the likes of Elon Musk that essentially want to turn X into a financial management hub. Where do you see, maybe I'll start with you, Eli, as an investor, where do you see the next frontier in financial services, given what we've seen maybe since the global financial crisis all the way to today?
Well, let's think about places where money and finance is particularly painful, where we spend too much time and there's too much frustration. I think about healthcare. Okay, there's so much waste in the healthcare system. In the U.S. alone, there's $2 trillion a year of waste in the healthcare system. That's almost 10% of the GDP in the US. Now, half of that is bad medicine, right? Bad clinics, bad diagnoses, bad preventative care. Half of that is really financially related. The billing is wrong. The collection didn't happen right. There was fraud. This is a great place for us to think about building better technology. We have actually done a lot of building in that space in the US. For thinking about frontiers, let's think about what happens in a market like the Kingdom. The Kingdom has had historically a largely public healthcare system. It's now shifting to become privatized, and it's going to have to tackle issues around revenue cycle management. That's an interesting frontier. I also think about property ownership, right? That's such a difficult process to buy a property and to get financing for a property. There's about 2 million mortgage applications a year in the US that are rejected. It's a huge waste of time. It's a huge expense for the banks who want to write those loans and for the people who want to get those loans. I think the problem is maybe even worse in commercial real estate. There's something like $2 trillion of commercial real estate loans that are coming due in the next 3 years. We've got to solve that problem. We backed a company called Capitalize. We helped build that company, in fact, that's going to fix that problem. And how is it doing it? It's doing it by, first of all, getting to the source data. Right? The source data on commercial real estate mortgages is all over the place. It's completely unstructured, and you need to look in so many different places to pull it all together. If you can do that, and we now have the capabilities to do that, capabilities we didn't have just a few years ago, then you can start to rebuild the workflows. Then you can start to rebuild the underwriting models on top of that.
And I think maybe you're not seeing much, Art, as Eli, since he's an investor and you're more on the operating side, would still love to understand what you think could potentially be, something that we can look out for as an incredible solution that can come out in the next 10 years.
Yeah, so I think what we're seeing is a trend of embedding payments inside of other vertical softwares. So you see Toast has announced their embedded payment business is growing rapidly. As the financial tools become more technologically or built on newer technology, you can then create API versions of those, which then allow them to be embedded in other software. So one of the things we've done this year is created Brex Embedded, which is the idea that you can take Brex and all of the use cases and embed it inside of a different workflow software. So if you're a large enterprise, you're using a procurement tool or a travel tool, you can now embed Brex inside of that, having all of the use cases of Brex and everything that Brex has done for you. And so I think that's probably this embedded payments, the thing that we're seeing on the frontier.
Jason?
Well, you said something before I reminded me that my 16-year-old daughter thinks Apple is her bank. And what's interesting about Apple, and we should talk about Google and X and TikTok, is they have these massive constituencies where they could be building, and many are building, financial services to go service their constituencies. Because we have this whole generation of kids, like my 16-year-old, where everything is on their phone, and they are integrating and working with constituencies. They have friends that they want to go either send money to or buy things with. There's lots of opportunities for creators in financial services. I think we also got to look at the generation. Like the generation of kids who are growing up now is everything is happening on their mobile device, and they're also part of a constituency. So how do companies build financial services to build these constituencies? Because frankly, people are more loyal to their money than anything else. So if that can be captured by a company like Apple, you create an enormous amount of loyalty, or a company like X, or a company like TikTok. I think the opportunity is immense.
Yeah, I think to piggyback on that, though, I think we've seen a lot of companies who aren't in financial services try to do it and fail, right? Marqeta was built on the idea that you are able to do financial services better than the Apples, the X's, the TikToks of the world. Do you think that they will kind of catch up to players like Brex and Marqeta, or do you think, because from our point of view, we haven't yet seen a lot of those players on the corporate side make inroads?
Well, I mean, has over $100 billion in deposits. Their savings card, their cash card, I think is 16 billion in deposits. I mean, they're really building something pretty incredible. Even on TikTok or Shine, it's like the amount of money that is moving through those platforms is just simply immense. I don't know if they're going to catch up to a Brex because Brex is servicing a very specific constituency, and these are massive companies that have to service a constituency at a much, much, much higher level. I think the Brexes of the world and many other players in that space are really building the technology to go service and focus on a very specialized part of the ecosystem, which allows you to build a massive business.
I'm sure we can speak for much longer, but I think maybe just to end it, just one sentence from each of you. You spent the last few days in Saudi. You've met some of the local founders. What has maybe, excited you or made you, for some of you for Jason, for example, this is your first time in the kingdom. Maybe just a quick comment on what experience was for you so far.
I'm blown away. I think just talking to entrepreneurs, young entrepreneurs who are here, just the excitement. It's really, it affects me in a way back. So Marqeta is my third company, and I started my first company in my mid-20s, and I'm seeing 20-year-olds in Saudi having the same excitement about being an entrepreneur, but also seeing His Excellency this morning talking about the policy and investment, so creating the roadmap for people to go build businesses. And this has only been happening since 2019. So the sky's the limit, and that's really exciting to see. Like I saw, Breadfast and the work that you've done with coffee and food delivery. It's like, it's really exciting to see what's happening here. And in many ways, I'm jealous that the opportunity is here and we're not seeing the same sort of policy investment in other parts of the world.
Eli, you're a veteran here, so I don't have to ask you this question, but I think, Art, maybe you can round it up for us and tell us what you think, and then we can finish it from there.
Yeah, so this is my second time in the kingdom, and obviously I've spent a lot more time in San Francisco than Saudi Arabia, but I have to say that the impatient optimism and the hustle of the founders I've met here and their just desire to build and win is really awe-inspiring. I think that coupled, as Jason said, with the government support, which we don't necessarily see in the local governments of San Francisco or the federal government of the US, bodes very well for this ecosystem. So I'm excited to continue to visit.
Thank you for speaking today, and thank you everyone for attending.